Welcome everybody to the Middle Class Investor this week. This is Seth Martin, your host. It is November 9th, 2014, and we are looking at the long-term bullish uptrend of the S&P 500. We've been looking at this for quite some time. We've got this rising wedge on here, but I'm not sure what to say about it at this point. I think we're just going to have to play it by ear. I don't know. Could be it's not actually a rising wedge. It could be that there's just a lot of manipulation in the market here at the very end of QE. We'll just have to wait and see what happens. You can see. Now let's go look at the other markets before we get off the weeklies. Let's look at the interest rate market. So we've been talking about this being potentially a bottom, and this being the first move off the bottom, and this being the first pullback after the first move. We talked about how the bond market is the inverse of this chart. So a couple of weeks ago, when the bond market, so envision this chart being upside down. The bond market shot way up, as you can see right here. And this is sometimes called a blow-off top. I realize it's a bottom, but the interest rate market is the inverse of the bond market. So envision this being up here. You have a blow-off top, and then a huge, sell-off, or in this case, a huge rally in interest rates. I was reading somewhere that this was some liquidity issue. Not sure what the cause of it was, but it doesn't really matter. What matters is what it looks like on the chart. And what it looks like, it is telling us about interest rates, which this looks like maybe the near-term bottom for interest rates. Anytime you get a hammer, we talked about this last week, get a hammer like this, it's usually a sign of at least an intermediate-term bottom. So we'll continue to watch that. But that's the 10-year Treasury interest rate market. Let's look at the Dow Jones. It looks a lot like the S&P 500, although it actually looks a little stronger. The Dow Jones, you can see here is in our resistance box already. We're at 17,570 or so. So we could see a pullback here in the Dow Jones. In fact, it would make a lot of sense for the market to pull back here, or maybe sometime early to the middle of next week. Now the question is it going to pull back? Well, initially it'll pull back to a higher low. The question is, will it turn around and will it do something like this? Will it make a lower low and then sell off this way? If it does, we're going to be watching very carefully for that lower low, and it potentially could mean that we need to take some action. So we'll be looking at that. We can look at volatility. Volatility a couple of weeks ago shot way up here into the 30s. We talked about at the time how unusual that was, because the volatility had never gone up that much and then turned around and sold off by that much. And in fact, I think I was saying that I read somewhere that you had to go back 113 years to find that kind of turnaround in volatility in the stock market, and in price action for that matter. But you can also see here that we are right at our trend line. Now, the trend lines don't work as well in the volatility index, because I actually don't know why, but the volatility market doesn't really trend. It tends to spend a lot of time in a sideways pattern, as you can see here. But I drew this trend line in here just because it looked like it was forming a trend line. So if it breaks through it, it breaks through it. But it would be very interesting if volatility, it's probably going to break through a little bit, but it'd be interesting to see if it turns around, leaves a little tail here, and then starts to head back up next week. I would say that's probably likely. Now let's look at the NASDAQ. The NASDAQ is also in resistance. You can see here, maybe got a little bit more room to the upside on the NASDAQ. Looks a little lagging behind the Dow, as does the S&P 500. So you might see a little higher market open on the S&P and NASDAQ on Monday. We'll just have to wait and see. Now we have a viewer in the UK, and I apologize, I don't know your name, but his username is Chief Storm. And so for Chief Storm, he's been asking me about looking at the FTSE market, and because that's the market he's interested in, that's where his money's tied up. And we had a little trouble finding a good chart for the FTSE. Now I was able to find these MSCI iShares are for, like, these are ETFs, or if you wanted to buy the UK, for example, or if you wanted to, I've got another one here for Germany. If you wanted to buy Germany, that's what you would buy. You'd buy the EWG. And if you wanted to buy the UK, you'd buy the EWU. Now, to me, he made a comment that maybe the European markets are leading the US market, and I would say that's a little bit hard to say. I'm going to show another chart here in a minute that would indicate that the DAX, at least, is lagging the U.S. markets. So, but this is the EWU. This is the iShares for the United Kingdom. You can see that it's been in an upward channel, for a long time. It also has kind of a narrowing, although the channel looks more defined. It's not real narrow, but it has somewhat narrowing, and it broke through, and now looks like it's wanting to at least test the underside of this line here. So we'll just have to wait and see. Again, I'm going to show a chart in a minute of the now, to me, the German market looks a little weaker, but again, I've got another chart that seems to indicate that that the German market is lagging the U.S. market and not leading, and we'll look at that in a second. But we'll start bringing these in because Chief Storm wants to keep an eye on the European markets, and we do too, by the way. The European markets are tightly connected to the U.S. markets. In fact, the markets today have never been more connected globally than they've ever been in history. So that's another source of risk, right? Defining that risk is very difficult because you have all these derivatives, and you have sovereign wealth funds, and a bunch of things that you just didn't have in the markets 30, 40 years ago. So it's a very different market than when, say, Warren Buffett started investing, or something like that. Or even maybe, I don't know how old our audience is, but, my parents grew up in the 50s and 60s. So those type of people, that age group, the markets are very different today than they were for that age group. So maybe what worked for your parents might not work for you, and so on and so forth. So anyway, the good news is we have a lot of technology at our disposal. There's really good tools you can use. In fact, I really ought to show you one before we exit today. But let's zoom in a little bit. Let's go back to the S&P 500, and let's look at say 6-month chart, and let's just zoom in a little bit on this and talk about what we might be looking for. As you can see, the S&P looks like it might go a little higher. Not much, but maybe a little bit. and then it should pull back. And the question is it going to pull? I would say it's probably going to pull back, probably all the way back into here before it bounces. Now the question is, does it bounce? Does it bounce and make a higher high, or does it bounce and make a lower high? So that's what we'll be looking for. That'll help us make a decision. What I might do, I might just keep a fund running here in paper money, just for the heck of it, for the group. And what I'll do is if this comes down, actually probably what I'll do is let's go back to a weekly chart, if I can get there. There we go. Let's go back to a weekly chart and zoom in on that real quick. Let's say that the market gets below this 2000 area next week. We'll just enter a position on the SDS. The SDS is the inverse of the S&P 500. You can see here it's done nothing but go straight down. But if the SDS, if we get a close, let's say above 2375 or so next week, we can take a long position in the SDS, and I'll just keep that in paper money, and we'll keep an eye on it. Currently, let's see if I've got a position in SDS in here I didn't know about, but that's options, so we won't worry about that. We'll buy some stock in there and then keep an eye on that. Okie doke. Let me show you. Well, first of all, let me see if I can find a tool that I was wanting to show everybody. There's helpful Google. This is a charting program. I've never used it, but it looks like a really good one. I don't know if there's anybody out there. Certainly Chief Storm, I know he's got some sort of brokerage software that he's using. But for those of you that don't have any charting software and you're looking to, use something that's free, this I thought looked pretty good. It looks like you can, if you sign up, it's got a sign in here. If you sign up for it, you get full utility out of it. You can put in stocks. You can look at a weekly chart. Pretty sure you can. Let's see. There's a weekly. Pretty sure you can zoom in somehow. But this is called freestockcharts.com. Freestockcharts.com. And for those of you that need a tool, you might look at this one. Look pretty good. I was just kind of piddling around looking for some tools that I could promote for those of you that aren't active in brokerage accounts. Now this you can't see because it's out of the screen. This right here, this FDAX 1214, this is the DAX. This is the future for the DAX. And this particular software that you're seeing it on is by another UK citizen, a guy named Steve Griffiths. It's called MT Predictor. And I use it for a very specific type of trading that we're not going to talk about too much here. But MT Predictor, what it does is it works on a mathematical basis, and it connects these swings for you so that you don't have to see them. And this particular most recent swing down, this three move swing, this down up down, is very corrective looking in nature. That's why I was saying that you could possibly have the DAX lagging the U.S. market. This looks like a correction. In fact, if you use MT Predictor and you click right here, you'll see that it's saying that the DAX will ultimately make a new high, and I would say that it probably might even go higher than that. So For Chief Storm, I would look. I know we were talking. He was kind of. It seemed like to me he was indicating that maybe the European markets might be leading the U.S. markets, but I'm not so sure that's the case. We'll just have to wait and see. Looks to me like the DAX could make. And this is where by the way, I borrowed these boxes and stuff that you see on my chart. MT Predictor makes them for you automatically. You can click. And I'm just used to knowing about where they are on the chart. That's why I can draw them myself on the other charting software. But it looks like the DAX might get into this 10,284 area on the futures now. So that's not the index. That's not the cash market, but the futures market. So for those of you that are interested in that, and we can wait. We'll just watch this and see. I'll start pulling up the DAX since Chief Storm would like to see that. What else can we go to? Getting back to this EWZ and EWG and EWU, I just wanted to show you can go online. This is the one for Germany. This is the BlackRock iShares, EWG, and here are their top holdings. Bayer, Siemens, BASF, Allianz, Daimler, SAP, Deutsche Bank, Deutsche Telekom. These are all companies that most of us have heard of. So you can see about 60% of their holdings are those companies. So the EWG probably trades kind of like the Dow Jones Industrial Average. We have an ETF for the Dow Jones Industrial Average. It's called the DIA, and for those of you that are interested in ETFs are kind of like indexing. You might have heard of somebody who says, "Oh, I just index." Well, that's what they're talking about. They're buying a portfolio of stocks that are correlated to the index, and that's pretty much how these are. That's why I think the EWU and the EWG are probably pretty good benchmarks. This is the EWU holdings. You can see HSBC, which is banking, Royal Dutch Shell, which is energy, BP, energy, GlaxoSmithKline, pharmaceutical, British American Tobacco, that's some consumer discretionary stuff, AstraZeneca, Vodafone. These are consumer related type. Lloyd's Banking, more finance. So the UK market in general is more heavily weighted to finance these days than the U.S. market is too, for that matter. But anyway, that's just a little background on EWG, EWU. We'll probably start looking at that. These will tell us pretty much all we need to know about what's going on in the European market. Let's see, what else? Is there anything else I wanted to cover this week before we end our session today? I think we just kind of have to wait and see what's going on with the Dow and the S&P. I know what we could look at. We could look at gold. Gold had a pretty big move last week. It kind of looks like the interest rate market did a couple of weeks ago. So let's zoom in on this a little bit. So, we kind of came down, made a hammer, and what you'll likely see is gold continue up beyond next week and probably continue to make higher highs. And I would look for gold to come into resistance around, let's put a box right. Whoops, that didn't work. How come that didn't work? Well, that's not working. So let's put a line right in this area. Whoops, that's not working either. Something's not right. I guess I haven't locked my screen down. Let's just put a line. So I would say right in this area, you'll see gold probably get tired. So you might see it meander its way up here. And then ultimately you're going to see gold come down into this area here, in my opinion. So you might see gold kind of meander its way up like this. Might actually get above that line, who knows. And then you're going to see a pretty hard move down that might look something like this. You know, and you get gold down below, probably below 1,000. So we'll just continue to watch that. So look for gold to get back up into this 1280 area from down here. Right now it's at 1180. So look for gold to move back up into this 1280 and then resume the sell-off down into this area. We're going to look for gold, you know, below 1100, maybe even below 1,000. So between 950 and 1100. It's a pretty wide range, but it's also a pretty expensive commodity. And then I think you're going to see a really big bounce in gold, probably maybe as high as this 1350 area, maybe even higher than that. Gold could get all the way back into the 1600 area before it resumes what's likely to be a downtrend. But that's a prediction, and nobody knows for sure, so we will leave it at that. The dollar has pulled back recently. Well, it pulled back and shot back up. I was thinking that we were still in this little pullback here, but the dollar has shot up and looks like it's trying to pull back. Ultimately, where you're going to see the dollar pull back probably into, let's just see here, probably into this area around 80, near 84. So if the dollar's done going up, you'll see a pullback into this 84 before you see the dollar resume higher. And this pullback into this area, and it might even go lower than that. This pullback will be correlated with that big bounce in gold. So you'll see the dollar move opposite from gold. As the dollar moves down, gold will move up. So you'll see the dollar do this, and you'll see the gold on the other side move up. But ultimately, this dollar looks like it's going to move higher, which means gold is going to move lower. Now, ultimately, really super long term, gold, goes up. So that means that the dollar super long term is going to weaken, which makes a lot of sense given, the money printing and the recklessness of the Federal Reserve in the United States, and really the countries all around the world are just copying the United States. So there's almost like a war to see who can devalue their currency the quickest. My guess is the United States will probably win that war. So and it may last the rest of my life. I mean, this could take decades to play out. But in the meantime, we can look at these trends. We can make decisions about how we want to stay invested or how we want to maybe sit on the sidelines. And that's what the middle class investor is all about. That's what we're doing here. So watch volatility next week. We had this trend line in here. It pulled back, but you could see volatility spike back up. Maybe make new highs. Maybe just kind of drift around and just kind of bounce around as it meanders its way up. We'll just have to watch and see. As usual, forward the link to your friends, family members, anybody that you think would be interested in a little commentary on the market. It's not that this is, personally tailored to you guys that listen to this, but it's so hard to watch any kind of TV news and get any decent understanding of what's going on in the marketplace. I'm really just trying to give you a better way of, if you did want to take action, how would you go about doing it? How do you know you're making a good decision? Because so much bad investing comes from reacting emotionally, and we don't want to do that if we can avoid it. So I'm sure there's other people out there that would like to view the weekly show and most likely it's people that you know, your friends, your family. You can follow me on Twitter at InvestorClass. That's the @ InvestorClass. And usually what I do is after I post the video, I will tweet the video link to Twitter for the off chance that somebody catches it that way. My guess is most people are going to catch this because you gave it to them. So you just copy the link and email it, and they can view it, subscribe to it, things like that. All right. Also, if you have any comments or something you want to discuss here on the YouTube video, just please respond in the comments section. Those come back to me. Actually, everybody can read them, but it actually sends me kind of like an email. So feel free to do that. And until next week, this has been the Middle Class Investor. Thank you, everybody. Take care. Have a great week. Bye-bye.